So now what? Is a crash imminent? Are we going to continue to the downside? What is going on with these crazy markets and the tariffs and the fear and everything else going on? Stick around, this should be a really good video today.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Friday. My name is Adam Kahn, and this is Investing with Adam K. I hope everybody's doing well. Before I forget, before I get into the video, do me a favor if you haven't already, smash that like button, hit the subscribe button, make some comments in the comment section. I can't tell you guys how much I appreciate that. It really helps YouTube's algorithm. And if you appreciate the content I'm doing and like the discussions, by all means, I really appreciate you helping grow the channel because it's kind of fun and I like doing it. So, what do you do now? Well, pretty much whatever your plan was all along. Today was the first day that I finally saw what looked like some panic in the sell off. The reason yesterday that I thought we'd have continued selling pressure is despite how much the markets were down, it seemed too orderly to me. You want to see some panic to flush out the rest of the sellers. And I'm not saying this is the bottom. It could be, but I'm not calling the bottom saying this is it. And I really don't always suggest trying to time markets like that. But what I am saying is I could see the panic in the way that the stocks were trading. Today had a lot more bouncing around, down on the market, then up, then down, and selling off into the close because people are scared to carry positions into the weekend. That's all really healthy and good for the market. Now, to be fair, it could have a way worse flush out. To be fair to the analysts, there's really two coins here. One is we don't go into a major recession, it's just a good scare, and the markets catch themselves and they probably rebound pretty well over the next few months. The other one is these tariffs get out of control. It does cause a worldwide recession. Earnings start to fall, and you see some follow through. That being said, some of the stocks that already seem like good value actually held up pretty good today. I've talked about Target a lot, and it isn't that I love Target. I actually don't love the company that much. But when I look at their numbers and their earnings and what their cash ratio is for their payout on their dividend, seems like good value. So no matter what happens in the market, as long as we don't go into a recession that's so bad that they can't pay their dividend, I see that as pretty good value. The price to earnings ratio is super low at this point. The cash flow is still strong. They haven't updated their earnings estimates, so they're still expected to grow going forward into next year. So you have a company that is growing that's only using 50% of their cash flow to be able to pay a 4.7% dividend, and the market's crashing. That's okay. It's kind of noise and everything else. I would expect Amazon and Google to have a nice follow through. I think Amazon hit a good support level here. And if you picked it up today, I'd be pretty comfortable with it. But understand, I wouldn't just dive right in with 100% of what I want to invest. I'd put 25% in. And then maybe it falls further and you're able to put another 25% in if it falls another 10% or so, and keep an eye for a big crash and then be ready to dive in. But this is a good pullback so far. And today, like I said, I finally felt like I saw some panic. I could hear it in the commentator's voice, like they sound more nervous than usual. They're asking, do you sell into it? Like, what should you do? Is this real question? But keep in mind, a month ago, Amazon was trading $240 a share and everybody was happy to buy it. It's now at $170 a share and everybody's scared. There's reason to be scared. So on Wednesday, when we heard about the liberation speech, the comment on the tariffs is if anybody decides to retaliate, I'm going to retaliate and double the size. So my question now is, now that China retaliated and put in a 34% tariff on the US, Do we come back and then put in another 68% tariff on top of what we've already done? And are we just misjudging the people we're trying to negotiate with? Because to be fair, we're a different nationality, we have different personality, and I have found in the past with the Chinese, they'll be okay putting their country into a recession not to lose face. I do worry that we would go too far and raise the tariff to 68% on top, because now I've said, if that was me who said it, that's what I'm going to do. So I feel like I need to do that going forward. And I do think if we did that, China would then do it back to us. And eventually the tariffs would get so expensive that it would kill all trade between the two countries. And my guess is we need them too. It might be in our benefit and we might be the stronger side, but I don't think it's so unrelated that we just don't need the items that we purchase from them that we should totally disregard it. Now, unfortunately, I'm not the guy who makes these decisions. That's not my pay grade. I make these videos. I don't get asked when they make those decisions. I'm a little surprised. I've been waiting by the phone thinking, when are they going to call me to see what I think we should be doing? But the phone still hasn't rung yet, so I haven't been put in charge of making these decisions. But that's also probably because I don't know a ton about the inner workings of what we buy from them and what we sell and how much that stuff's really needed for everything. And for those of you curious, other than a tiny bit of nibbling that I've been doing, today I bought a little bit. I actually put my toe in. When I saw what looked like panic, I bought a little bit more Target. I bought a little bit more Amazon. I bought a little bit more Netflix. I just felt like the markets were finally really bouncing around enough that it was probably time to put in, like I suggested, about the 25% of what somebody was going to put in. I allocated it today. Now, my hope is that I don't get to allocate the rest, and this is just the bottom, and I kick myself that I didn't put enough on. But I'm also prepared that if it's not, that I have more ammunition to keep firing, because maybe you get the real bargains. I mean, Whirlpool looks super attractive to me. Similar to Target, it seems like they have enough cash flow to be able to pay a dividend, which right now is 8% yield. So as long as they don't go out of business and they're able to continue to pay that dividend, to me, that's really good return on my investment. And if I get lucky enough that the stock actually drifts up as well, well, that's phenomenal. And I would be thrilled about that. It was nice to see Nike have a bit of a rebound on a rumor that maybe the negotiations with Vietnam are going better than expected, and maybe there'll be some renegotiating on the tariff, which I didn't look, probably also impacted OnCloud and Skechers and maybe even Foot Locker, who are all getting really beat up over this. Because the frustration is Nike was encouraged to move out of China into Vietnam to build their factories, to build a relationship with the Vietnamese, 4 or 5 years ago, when the same administration that's in now puts on these tariffs that are really hurting the companies like Nike. I think they're still good companies. I think Uber dropping down to close to $60 a share looks super attractive. There's a lot of deals out there that are beginning to look good to where I'm comfortable even if the market has more downside to go. I don't know if you guys feel the same way, but it was nice to see things feeling like a panic. I'm almost hoping there's more panic going into next week, but not because the tariffs got worse and the fights became more escalated, or anything that seems like things could really get thrown into whack. More that I just hope that people come home after the trading on Friday, get super nervous, and put orders to sell for Monday morning that could potentially be another push to the downside, creating what I'm hoping is a buying opportunity. The interesting thing is while the 10-year finally got below 4% and really had a nice correction, I didn't see the mortgage rates get that much better. I did see a little bit of improvement, but nowhere near the improvement that the 10-year had. And usually they're pretty well interlinked. Coordinated? That's not really right. Either way, I was pretty shocked to see that mortgages didn't improve that much. They had yesterday and the day before, So maybe they got ahead, and while the 10-year caught up, it just kind of evened itself out. But I would have expected to see a little bit more improvement on the mortgage rates. Now, Powell did come out and kind of say there is no need for them to do some surprise rate cut. They're not in any panic mode. I don't think they see this as any big deal. And when I think of things that Powell said going back a while, he had this attitude a long time ago that no boom has come after a boom, meaning you need to have a washout and potentially a recession in order to rebuild and have a new boom cycle. So I don't know that he even sees this as such a bad thing. He may see this as a good thing, and it might just be washing out the fluff that was in the market. Now, like everybody, I don't like it either. Nobody likes to see their account down, and I am down a good amount of money in my set it and forget it account as well. But it really is set it and forget it for that account, and I try to forget it. I know it's down, like I'm not an idiot, but at the same time, it's noise because my job is to do my job, pay my bills, and hope that that grows over 10 years and not worry about what happens on a day to day or week to week or even month to month. Like, it should work out over time. I've been actually pretty impressed with how Bitcoin is held up. It tells me that either there's some support or there's a lack of selling going on. And I would have thought there'd be a full money crunch and we would have seen equities come down, housing come down, crypto come down, gold even. And we've seen small corrections in some of it, but not the real money suck, for lack of a better word, that I would expect if there was a real crash coming. I do think if equities continue lower and then don't rebound over the next 6 months, that you might see these other things start to have a drawdown too. I'd be cautious that housing could be second, but if the stocks catch themselves, I don't know that we'll see a housing correction and all of a sudden people start to feel comfortable again. And I'd actually expect to see it start going higher and interest rates maybe even drift back up and the mortgage rates not stay where they are currently. And this might have been a really good opportunity that is only going to last a short amount of time. Now, as always, this is not financial advice. Please do not listen to me when you're making your financial decisions. You need to do your own research. You need to reach out to your financial planner or advisor or whoever you use because they know your unique situation. And what works for me may not be what works for you. And I am just a guy on YouTube sharing what works for me. And I hope you guys look at this as entertainment value and I hope you enjoy it. That being said, I think the housing market has remained rather resilient, especially here in Las Vegas. The city continues to grow. There's more demand, even if the prices are high and the rates are kind of high. And I don't know that I really see that changing no matter what else is going on, unless this topples over to become a real recession, which, again, I don't know that that's going to happen. And I still don't think it is. I understand none of us like that eggs have gotten more expensive or going to the grocery store or going out to dinner and that maybe we have to cut back on some things that we used to be able to do. And, for us, it was going out to dinner. We used to go out a lot more often. Now we eat at home like 90% of the time. The reality is I've gotten more accustomed to it. I like eating at home. We know what ingredients go into it. We're a little more careful about not using too much salt as, older and whatever else. The funny thing is I made chicken marsala yesterday, which is one of the things I used to do at my restaurant, so I enjoy doing it. And I said to my wife, I'm tempted once a week. And if you guys made it this far and you're listening, tell me what you think. And I don't know that I'm going to do it, even if you guys think I should. But I was thinking about once a week on Thursdays when swim is a little bit later. Um, Maybe when I do the prep work, I'll do it in the kitchen and I'll do the videos and I'll record some me talking about finance and trying not to get too distracted with what I'm cooking. But I told her that going forward, maybe I'll cook Thursdays to take a day off her hand where she doesn't have to worry about coming up with what to cook. And generally, I pick things that we used to cook in the restaurant, which I know she enjoys. I'm also seeing panic in places I never thought I would. My wife doesn't pay a whole lot of attention to the markets, and she started to get nervous, and I'm not sure where that came from. I'm getting calls from friends who never seem to pay attention to the markets that seem a little bit nervous. And that's why I say these are all good things, indicating we're getting closer to being finished, which is really what I hope for. Like, to be fair to what Powell said, you kind of need the washout for the market to go the other way. And we did have a little bit too much fluff in it. So now you have to shake out the people who aren't comfortable that they own these things for the long term. You have to get rid of the people who don't really plan to own things for 5 or 10 years or longer. So do some soul searching for yourselves too, and recognize, do you really feel comfortable holding what you have up or down for the next 5 years or 10 years? What's your timeline? Is it money that you think you're going to need in the next year or two? Typically, when I put money into the set it and forget it account, I think of it no different than buying a pack of gum. Like, I really think of that money as spent money, and that I hope that pack of gum has more value in time. But I spent it. It spent money and it's gone. And then I hope to get enough packs of gum that I don't need to work because I got enough packs of gum to last me my lifetime. I know I can eat my 2 pieces a day and we'll be just fine. And my wife is taken care of and my son. And I don't need any more than that. So my goal is to have enough packs of gum. Do you guys do similar? Like, what do you guys do in your accounts, and how's it been going? Did you buy today? Did you sell a little today? Are you worried about what's going on? Like, feel free to make the comments in the chat box. I'm happy to discuss it and tell you what I think or give you suggestions. I just hope nobody's too leveraged. The funny thing is, I watched some lady this morning on CNBC who works for Morgan Stanley essentially advising their clients to sell if they're over invested. And I'm thinking, well, why would you advise them to sell now and not previously if they're over invested? Because one, you shouldn't have let them get over invested if you're the advisor and you're giving advice. And two, why would you not have really been on the phone prior to Wednesday's announcement saying, hey, there's some risk that's coming out. I understand you're comfortable with this position, but I'd really advise making it more appropriate for not being over invested, as opposed to waiting until, I mean, the market was down, what, 6% today on average for the three indices, and another 5 yesterday. Waiting for the market to drop another 11% to tell your clients that maybe you shouldn't be over invested. That seems like something an advisor should be suggesting to their clients all the time, is to not be over invested in something. But silly me, as I said, I'm not an advisor. I'm just a guy on YouTube sharing my thoughts. Anyway, I hope everybody had a nice week. I hope you have a nice weekend this weekend. We have our Miracle League thing again tomorrow. Not thing, but baseball game. So we're excited to hang out with the kids and help coach. Um, and then a few other things going on for the weekend. I hope everybody's doing all right and the markets weren't too difficult. I know it was a tough day. I hope everybody got through it and has direction for what they want to do going forward. Again, do me a favor, give a thumbs up, hit the subscribe button, and make some comments. I really do appreciate it.